Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 25th, 2026, and we're diving into the fourth quarter 2025 earnings report of Fomento Económico Mexicano, better known as FEMSA. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. FEMSA is a major player in the retail and beverage industry, with operations spanning across the Americas and Europe. Their latest earnings report provides a comprehensive look at their performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. FEMSA reported total consolidated revenues of $220.1 billion for the fourth quarter of 2025, a 5.7% increase compared to the same period last year. John, what are the key drivers behind this growth?
The revenue growth was driven by strong performance across all business units, particularly in Proximity Americas and Coca-Cola FEMSA. The company also benefited from a favorable exchange rate effect due to the appreciation of the Mexican peso against some foreign currencies.
And how did this impact their profitability?
Despite a slight contraction in gross margin, income from operations increased by 8.5% to $24.5 billion, thanks to operational efficiencies and margin expansion in key divisions like Proximity Americas and Coca-Cola FEMSA. Net income also saw a significant rise of 33.6% to $12.7 billion.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.50 for FEMSA, but the actual EPS came in at $1.36. John, can you explain the factors that led to this miss?
Certainly. The miss on EPS was primarily due to higher-than-expected tax expenses and a non-cash foreign exchange loss related to their U.S. dollar-denominated cash position. These factors offset the operational gains and led to the EPS coming in below expectations.
How significant is this miss in the broader context of FEMSA's performance?
While the EPS miss is notable, it's important to consider the overall strong operational performance and revenue growth. The company is navigating a complex economic environment, and their strategic initiatives are positioning them well for future growth.
Operational efficiencies and future outlook. FEMSA's adjusted EBITDA increased by 14.9% to $39.7 billion. What does this tell us about their operational efficiency?
This significant increase in adjusted EBITDA reflects FEMSA's successful cost management and operational efficiencies. The company has been focusing on streamlining operations and integrating corporate teams, which has resulted in a more efficient structure.
Looking ahead, what are FEMSA's strategic priorities?
FEMSA is committed to expanding its retail and beverage platforms, particularly in Mexico and South America. They are also focusing on digital transformation and restructuring efforts to enhance efficiency and drive growth. The company is optimistic about maintaining its momentum despite economic challenges.
CEO's vision and strategic initiatives. FEMSA's CEO, Jose Antonio Fernandez Garza Laguera, shared his vision for the company. What are the key takeaways from his statement?
The CEO emphasized the importance of OXXO and Coca-Cola FEMSA as core assets and highlighted the opportunities for growth in these areas. He also mentioned the ongoing restructuring efforts to integrate corporate teams and align digital strategies with OXXO, which are expected to drive efficiency and growth.
How does this align with FEMSA's long-term goals?
FEMSA's strategic focus on expanding its retail and beverage operations, coupled with digital transformation, aligns with their long-term goal of creating economic and social value. The restructuring and integration efforts are crucial for achieving sustainable growth and enhancing shareholder value.